Welcome to our Infinite Banking Versus series, where we put the infinite banking concept head to head with other financial strategies that you will know to see which actually aligns best with your financial goals. And today we're comparing the infinite banking concept to Roth IRAs, and we'll use our 8 ideals framework to break it all down.
That's right, Jonah. The Roth IRA is really a newer retirement vehicle. It was introduced in 1997 and has become quite popular since then. But let's talk about how it stacks up against infinite banking, and let's go ahead and dive into the comparison.
Now, before we dive into these 8 ideals, let's take a quick history lesson. The Roth IRA is named after Senator William Roth, and this was introduced as part of the Taxpayer Relief Act of 1997. The Roth IRA's primary focus was to provide a tax-advantaged way for Americans to invest their way to retirement, especially those that believed the tax rates would actually increase in the future. Since its inception, it's become a cornerstone of many retirement plans. It offers tax-free growth and withdrawals under certain conditions.
So whole life insurance, on the other hand, has a much longer history. It dates back to the mid-1900s when mutual life insurance companies began offering policies with guaranteed death benefits and cash value accumulation. Over the years, these policies have evolved, and today they're not just used for insurance, but also as a financial tool. You see, infinite banking takes this a step further by leveraging the cash value for personal banking purposes. Really what you're doing is you're creating a system of liquidity and growth that's entirely under your control.
So we're comparing a relative newcomer to a financial tool with over a century of history. Now let's see how they both measure up using our 8 ideals.
All right, Jonah, so let's start with number 1, guarantees. Infinite banking policies structured as properly designed whole life insurance provide guaranteed growth and guaranteed death benefit. One of the really nice features is that you always know the minimum your policy will earn, which can be a huge comfort in, let's call it, uncertain economic times.
In contrast, Roth IRAs depend on the market. There are no guarantees on return. Most people know that. Your investments can absolutely grow significantly, but they can also lose value. The only guarantee inside of a Roth IRA is the tax-free status of the contributions and your qualified withdrawals.
Yeah, Jonah, it's important to note that the guaranteed growth in whole life insurance is backed by the financial strength of the insurance company. So many of these companies have paid dividends consistently for, I'm talking about 100 plus, 125 plus years. We're talking through the wars, through economic downturns, you name it. That's a level of reliability Roth IRAs just can't match.
However, for investors who are comfortable with market fluctuations, Roth IRAs offer the potential of higher long-term returns. But you do have to remember, potential does not equal certainty.
All right, next up, let's talk about constant compounding. This is one of my favorite things. So infinite banking really shines here because your deposited dollars compound uninterrupted. I'm talking about even when you take them out as a policy loan. This uninterrupted growth is one of the key benefits that sets it apart from traditional savings accounts or really any other sort of investment account out there.
With Roth IRAs, compounding occurs, but it's entirely dependent on your investment performance. If the market dips, your compounding slows or even goes backward. And if you withdraw funds early, you not only disrupt compounding, but you could face penalties and taxes on your earnings.
Yeah, man, no one likes penalties, but what they do like is the ability to borrow against your policy without interrupting its compounding. Now, in my opinion, that is a game changer. It means that you can leverage your money for opportunities or emergencies while literally still growing your wealth.
Yeah. On the flip side, Roth IRA holders often need to liquidate investments to access funds, which of course, if you take money out, it halts your compounding on those assets, and it might even force you to have to sell them at a really inopportune time.
All right, Jonah, it's time to flow into liquidity. In my opinion, infinite banking offers unmatched liquidity. I'm talking about you can borrow against your policy at any time, for any reason, without any waiting period, and you can do that without any penalties or even the need to qualify. The funds just come right from the insurance company, so your cash value remains intact, continuing to grow.
Roth IRAs, while flexible for retirement accounts, are less liquid. Now, you can withdraw contributions penalty-free, at any time. But if you access any earnings before you're 59 and a half, you're usually going to incur a 10% penalty and taxes. There are exceptions for certain qualified expenses, but it's far from the unrestricted access that the alternative infinite banking provides.
Okay, that doesn't sound too bad. One thing I really enjoy is that policy loans and infinite banking don't actually require repayments on a set schedule. You set the terms, you're in control, making it more flexible for managing your day-to-day cash flow.
In contrast, once you've withdrawn funds from a Roth IRA, you cannot replace them. Those contribution limits do not reset.
All right, Jonah, next up, let's talk about flexibility, aka use. So infinite banking gives you full control over how you use your money, whether that's for investments, whether it's for emergencies, whether it's for other major purchases like a boat or a car. There are no restrictions or penalties, which is a stark contrast to most other financial tools out there.
Roth IRAs are primarily for retirement savings, so their use is more limited. Now, there are exceptions for things like a first home purchase or educational expenses. Using the funds for non-qualified purposes, though, trigger penalties and taxes.
That's definitely good to know. Now, the type of flexibility that I'm talking about makes infinite banking an excellent option for people who are like entrepreneurs, investors, or really anyone who values having quick and easy access to their money without all the restrictions and the red tape and all that good stuff.
With Roth IRAs, you're playing by IRS rules, and those rules can be restrictive. It just depends on your financial goals. And of course, let's not forget that the IRS can also change the rules. I think there's a saying, right? He who has the gold makes the rules.
All right, Jonah, so I think it's time we discuss ideal number 5, and that's going to be privacy. So privacy is a big advantage of infinite banking. You see, life insurance policies are private contracts, meaning they're not subject to the same level of scrutiny or reporting as normal retirement accounts. Unless you lapse your policy or surrender the policy, the IRS isn't involved whatsoever.
Roth IRAs, by contrast, require annual reporting to the IRS. Your contributions, your distributions, and even your account balances can be subject to scrutiny. That, of course, reduces the level of privacy when you compare it to something like infinite banking.
Yeah, I tend to think that the less the government is involved, the better, but that's just me, which is why I think infinite banking can be a major consideration for individuals who value privacy and really want to keep their wealth building strategies away from all those prying eyes. You know those prying eyes I'm talking about?
With Roth IRAs, you have to be comfortable with the fact that Uncle Sam is always aware of your account's activity.
All right, Jonah, so I know this one is a big one for the Roth IRA people out there, so let's talk about taxes. Now, infinite banking allows tax-deferred growth, meaning you can access your cash value tax-free through policy loans. Not only that, but of course the death benefit is also going to be tax-free to your heirs, making it a pretty attractive option for tax-efficient wealth transfer. Because the last thing I want to do is be giving half my money to the government, right?
Well, Roth IRAs also offer significant tax advantages. Contributions are made with after-tax dollars, same as the life insurance policy. But all growth and qualified withdrawals are tax-free. However, Roth IRAs have contribution limits and income eligibility requirements, which can restrict who can take full advantage. For instance, this year you can only contribute $7,000 into your Roth IRA all year if you're under 55 years old. If you're over that age, I think they give you an extra $1,000 you can contribute. And you cannot make more than $161,000 as a single person if you want to have use of a Roth IRA at all.
Yeah, leave it to the government to limit you on a good thing. Luckily, the tax-free access and infinite banking doesn't come with all the strings attached. You're not bounded by age limits or required minimum distributions, aka RMDs, which can really be kind of a drawback even on the tax-advantaged Roth IRA, in my opinion.
Still, the Roth IRA's tax-free growth and withdrawals are hard to beat for many investors, or people who qualify.
You know, Jonah, I can't say I completely disagree. Now, you just mentioned investors, so let's talk about ideal number 7, and that's going to be rate of return. Now, the rate of return in infinite banking is steady and it's predictable. You kind of say it's boring. While it's not designed to beat the market in any way, it offers a safe and consistent way to really grow your wealth over time.
Roth IRAs, on the other hand, have the potential for much higher returns, right? That's what an investment is. It just depends on your investment choices. But with that potential comes market risk. And all that potential has just the same possibility of losses.
I will say it's worth emphasizing that infinite banking's returns are often supplemented by dividends from the insurance company, which adds just an extra layer of growth. You know that 120, 130 plus year dividend? Yeah, that's what I'm talking about.
Meanwhile, with Roth IRAs, your returns are entirely tied to the performance of your chosen investments. For some, the risk is worth it. But for others, the peace of mind from guaranteed returns is just invaluable.
Yeah, I guess it really depends on your risk tolerance at the end of the day. So let's go ahead and touch on the last ideal, Jonah, and that's passive income. So infinite banking can actually generate passive income through policy loans while maintaining your policy's growth. Now, this can be a really powerful strategy for supplementing your income in retirement, paired with maybe other things, or funding other ventures if you so choose.
Roth IRAs are also a great source of passive income in retirement, as qualified withdrawals are tax-free. We've said that a few times. However, building that income stream depends heavily on consistent market performance and disciplined contributions over time.
Yeah, that's definitely something to consider, Jonah. Well, with infinite banking, you're not dependent on market conditions. Your income stream is really based on the guarantees and the flexibility of the policy.
With that said, the Roth IRA's tax-free withdrawals do provide a level of predictability and security that many retirees appreciate.
So you might ask, which is better for you? It really depends on your financial goals and your priorities. If you're looking for guarantees, liquidity, and privacy, infinite banking, it might be the better fit.
But if you're focused on potentially higher rates of return, then maybe a Roth IRA is your go-to.
If infinite banking sounds like the right choice for you, or if you're curious about how it could transform your financial strategy, go ahead and click that link in the description below to schedule yourself a free cash consultation. Let's discuss your goals and find out the best solution for your financial needs.
Yeah, and don't forget to like, comment, and subscribe. Let us know your thoughts on which of these 8 ideals actually matter most to you. And thanks for watching. We'll see you in the next video.